Hi folks, how you doing? Chris here, and we're going to go over a few day trades today, options day trades. So it's going to be three separate trades I'm going to go through with you. The first one was on CGC this morning. So basically there wasn't much action first thing this morning. So I was watching for some action and I saw CGC had a gap up open and in fact was increasing the odds that this was our daily higher low being set right here, because we had gapped up right above yesterday's close and most likely we're going to see a move higher. So I was watching what was happening on the open, and so ignore this blip right here, that's something else, because I traded it via options. So I'll show you right here. I'll show you the option right here on the right side. It was the February 21st expiry 23 strike call options. Now look, you'll see that when I zoom in where exactly I made the entry and where I made the exits. So you can see right here, first thing, we moved up above the close of yesterday, considerably above the close of yesterday actually, closed the gap from the previous day, moved up, and then had an initial pullback on light volume. At this point, when I saw the fourth candle forming, I said that based on this current technical formation, it is in fact likely, it is a decent probability scenario that CGC could see a move higher from here and break the high of the day. So what I did was I was front running a breakout essentially. So I entered these calls here on a limit order. So I got in at a decent price, and if you look at my exact entry, it was around 145 to 150 was my average price on those calls. Okay, and if you look at what happened throughout the rest of the day, those calls didn't, okay, they did go back to 150 at one point, but basically that was a great trade because we did in fact get that breakout afterwards. Okay, so entered the calls here in a limit order and then was slowly selling at the ask as we were moving higher. Okay, on limit orders. I can't stress enough, guys, with options in markets that are not being parabolic. Okay, so we're not looking at a market here that has an extreme supply demand imbalance where there's a massive short squeeze or a massive panic. In those cases, I would say use a market order potentially. But in this case, especially on this type of setup, definitely a limit order is the right choice because you will get filled at a much better price. And when the option moves in your favor, those who are trying to get in panic are trying to buy those options. And if you already have them, you can sell them to those people who are panic buying. You see? So, secret info right there. All right, so that was the first trade. Next trade was shorting calls on BYND. So let's go over that real quick. So looking at BYND, what happened today was, based on the prior day's price action, you can see what we did there. Looking at the daily time frame, the initial move was higher and then failure. So when we see a pattern fail, usually there's traders trapped on the other side of that. So we need to be aware of where they are trapped. And in this case, longs got trapped and the bears made money. So I shorted calls. If we look back here, I shorted calls at 10 a.m., just after 10 a.m. on the break below 121.50. Okay, so we had here consolidated for about 25 minutes. And as you can see, we were making lower highs, lack of follow through, lack of volume, no bounce there. So when you're seeing that kind of price action, it is in fact likely that if the bulls can't hold this price here, we're going to go lower. So once we broke below 121.50, I said it was a higher probability at that point that this was going to be the high of the day on BYND. So I shorted the calls above the high of the day, the 128s. And it was a great trade. In fact, as you can see, there was my P&L right there. So I shorted a few of them. I didn't short a million of them, just a couple. As we're back testing strategies here, guys. And then you can see I covered some at 10:30 a.m. when we saw a little bit of a flag here, saw a little bounce, a couple of higher closes. So I decided to cover a few there. And then we got to move lower. and I have one contract left still riding it. At this point, it's not worth covering because there's no reason to cover unless I want to just take my money and run, you see? Well, my fake money, if that is. Okay, so that was the second trade. Let's go over Roku. Roku was a similar type of trade where I was shorting calls above the high of the day, and then I covered for a loss on this one. So let's look at the 128 calls. And you can see here that I sold some at around 10 a.m. Same deal. Right around here. When I saw it come up, make a lower high, and then fail, I knew we were going to most likely stay in an equilibrium at this point. So I decided to short some calls above the high of the day. And I went away and ate breakfast, and I didn't take any partial profit. So that was my mistake on this trade. I did not take partial profit. Here I was considerably in profit, actually. And here as well, right here I was considerably in profit, because when the price just does nothing and volatility drops off and you're short the options, those premiums just decay. They just absolutely decay. When there's a lack of demand and there's a lack of volatility in the market, those premiums that you sold go down really, really fast. So that's an edge. And people ask, why do you day trade options? Well, once you understand volatility and how volatility affects these option prices on a daily basis, you'll understand why I day trade options, okay? Short or long, it doesn't matter. You sell them, you buy them, as long as you're on the right side of volatility. So basically I didn't cover any, and my mistake was letting the trade go negative. Of course, I didn't care enough because it was a paper trading account. So there you go. That's why we're paper trading, because we're trying to get rid of these mistakes out of our trading. So I let the trade go red, and I said I have a stop loss above the high of the day. And I covered once we broke the high of the day. So as you can see right there, 11:40-ish was when Roku was breaking the high of the day. And just to note, of course, look at what Roku was doing. We broke the high of the day, but look at where the option prices were based on where they opened. They were much lower. That's due to a drop in volatility. That's why you always need to be on the right side of volatility. Do I need to say it again? Here we go. And now you can see a lot of call buying on these options here, the 128 calls, a few hundreds of contracts coming through there. So what I did was I covered them all here. I covered them. And then I actually decided, I was watching the tape and watching the price action, and I decided to go long the calls, the same calls that I was short there. And I decided to, well, I basically scalped them, and that was a profitable trade right there. We can go back and look, but basically you can see there I bought some there, and I was selling them as they were going higher. I was buying in the probably just under $3. I think it was about $3, and I was selling them at like $3.20, $3.30, etc. Okay. And that was it. So I did regain some of the loss on that trade. And at the same time as Roku was breaking out, I was in fact shorting the 125 puts. So right there, right around 11:40, you can see there 125 puts. I was selling them, and I did sell about 20 or more at that point. And then I bought some back as we came up here. As we were holding 128.50 and moving higher, I sold some more there. And then I covered up here, covered a few, covered most of them actually. So that was a nice trade. Total profit on the trade is $400. And as you can see, I did in fact short some more just now. I let it ride for a bit, but now that we're back above 128.50, I'm saying this is bullish in general. So I have a stop loss below these lows, and as long as Roku just chops around, I'm making money. So that's the beauty of being short options in low volatility markets. All right, guys, so I hope you enjoyed this video, and if you learned something, let me know. Take care, bye.